Hey guys, Jeff here. Time for the next educational video. Today we are talking about order blocks, as you can see from the title. But before I do that, don't forget to check out our Discord server, linked in the description below. Also, when you're there, we have free and premium signals, cheapest price you can find. Anywho, now that all that boring crap is out of the way, we're going to talk about order blocks, otherwise known as supply and demand zones, otherwise known as an institutional candle. Now, what is the theory behind the order block? It has a lot to do with imbalances, where orders were created and left behind. I'm trying to do this as quickly as possible while still explaining. Right now, we are on the daily time frame. If you do not understand market structure, click the video link in the description below explaining how to do market structure, because it is very important to know what the direction the general market is heading before you try to start trading order blocks and or supply and demand zones. So right here, we have a very large FVG. Now, if you don't know what an FVG is, you got to watch that video too. But basically, what we have is an FVG. It's fair value gap where orders are left behind. So there weren't enough sell orders to match the buy orders in this candle. So what ended up happening is the price skyrocketed. A bunch of buy orders, not enough sell orders, price skyrockets. When that happens, typically there's going to be orders left behind. This is not as common on Bitcoin. It's more common on like Forex or indices, but it happens on Bitcoin too. Basically, a company or institution has, let's say we're talking about Bitcoin, right? They want to buy 1,000 Bitcoin, which really isn't that much, but let's just say it's a lot. Well, we're 10,000 Bitcoin. There you go. They want to buy 10,000 Bitcoin, but there's not, 10,000 Bitcoin for sale. So what ends up happening is they'll buy maybe 300, okay? And that shoots price. That skyrockets price. Or maybe they'll buy 3,000. Try to stay with my right numbers here. So price shoots up, okay? Eventually, some sell orders do come in, so that it does start to fill. However, they still got 7,000 Bitcoin chilling in this candle here, waiting to be filled, They're not likely to cancel that order because what they want to do is they want to create an imbalance in the market so that other retail who see this candle, right, they jump on too late. Well, the market maker / institutions, they want to bring price back down here in order to once now not only liquidate or hit those stops from those retail, but also to fill the remainder of the orders that they had put in there. And then once again, that's going to create another imbalance. And that's often why you see this, right? I mean, you can see it right here. This is doing it right here. Several times this has happened. This order block here has not been filled yet. So I do expect price to come back down here before maybe it doesn't have to come back before it goes up, but it's going to eventually come back down here again. More than likely. Of course, they're not going to sit with their orders forever, but it is what it is. So now I'm going to show you how to draw them. So this candle right here is an opposite of this one. So this is a down candle, followed by an up candle. Let me remove this so we don't have that there. This is what's called an institutional candle. So the last candle before the break is the institutional candle. That is where we draw our OB, or our supply and demand. Depending on what time zone you're on, I suggest you put the letter of the time zone there. I prefer to call this would be a demand zone, because there's demand waiting here. There's buy orders waiting here. If there is a zone on the top, then there's sell orders waiting there. That's a supply zone. So let's take a look at this one here and why I don't like this one. So we take a look at this OB / demand zone, and we see how it wicked it right away, right? So there's no imbalance here. We want there to be an imbalance left behind. We want this FVG left behind for added confluence. There isn't one here, which does not give me confidence that this zone here would be respected. Oh, also, side note, your box is going to actually go to the bottom of whatever the wick is. You wouldn't do this. You do the bottom of this wick. Just a little side note there. So because this got wicked immediately, there's no FVG. There's no fair value gap here. I don't like it. I wouldn't want to trade it. Moving right along. Then we had another little stoppage here. So we'll mark this one off. And once again, this wick here cleared that wick here. So there's no fair value gap here. I don't like this. I would not take this trade. And look what would have happened had you tried to trade this. You would have went long here. You would have stopped out right here because your stop's going to be right here. You can go a little past it, but typically your stop's going to be the bottom here because the market maker's not going to want whatever orders they had to go to red or to liquidate. So that's why we put it on the wick. And right here, as you can see, had you taken this trade, you would have stopped out immediately. So how do we add even more confluence to this zone here? Let's bring this back. Let me see, bring it back. How do we add even more confluence to here? We want to see an inner structure or a major structure break before price re-enters this zone. Again, if you don't know what I'm talking about, you need to watch my market structure video. So right here is the top of this structure. So if we draw a straight line, we have a market structure break or a break of structure right here. So this adds confluence to this. Now, if this line only gets wicked and doesn't actually have a break of structure, I lose confidence once again in this trade. Now there's still fair value gap here. So there's still a reason to want to trade this level. But I would not be looking to long for continuation. I might be looking to long for a scalp reaction. And that's more than likely could happen. But again, we don't know that until price returns. So now we have two levels of confluence right now. We have a fair value gap left behind, a very big one, as a matter of fact. We have a break of structure up here, very, very clearly a break of structure. And now we're starting to see a shift back down. So do we short from here to try to get to here? The answer is no, do not do that. Unless we have ourselves a reciprocating order block. But again, that's going to go against our third level of confluence. Our third level of confluence is matching the trend. We have a 4-hour uptrend right here. While daily technically is bearish, because our structure does have it, this is a bearish move, right? We are anticipating something like this. But right now, this inner structure, this 4-hour structure is bullish. So we're looking to match that time frame. We're looking to match that time frame. So let's say 1, we want FEG behind. 2, we want to see a break of structure after FEG. 3, we want to match time frame bias. Okay, so right there is 3 forms of confluence that we're looking for to give us more confluence that this trade will work. So why Jeff? Why can't we short? Why can't we short here? Because there's no guarantee that this is just going to do this. While maybe a short might work in the short term, we don't really know what's going to happen here. And technically, there's an order block right here. Well, I don't really like that one either. Yeah, there's no order blocks in this mess here that I like. There could be on a lower time frame, but not on this time frame. But this could easily, this doesn't have to go straight here. This could go up from here. And could even do this for a while before it finally. We want to see a lower time frame chach on the way down. And depending on how aggressive you want to be before. So I personally would be looking for this level to break right here. This level breaks right here. This is the farthest into this fair value gap we've gone, right? It was here. We did wick into the fair value gap. We did pick up some of that imbalance and continued on, but we haven't now made a bearish move. So I would be looking, before I'm even thinking about trading this or shorting to it, I want to see a switch on this time frame, not on not on, 4-hour or 15-minute or anything. I want to see this level broken on the daily time frame. Now, some people would disagree with me and say that, as it's going, like look, this is a value here. Well, you just broke it right here, right? Well, what did it do? It continued up. So I don't like that. For me personally, I see this as one move. Oops, as one solid move. I don't count this crap here. So I'm looking for this level to break. Once this level breaks, another OB is likely to have been formed in this general area. We don't have it yet. I would expect there to be a blue candle first, and then an imbalance down. Movement like this typically doesn't create much of an OB, because technically, if we're looking back, this from here to that candle, that would have been your OB right there, and it was immediately destroyed. It won't let me. It won't let me because of a magnet. It's right there, but it was immediately destroyed right there. So again, I don't like that. That would have been a bad trade to take. We didn't let it go far enough to break structure, and you would have gotten hurt. Remember, break of structure after fair value gap is what we want to see. We have that here again, and then now we're looking for a chotch on the way down. Once this level is broken, like I said, there likely will be there will be a supply zone somewhere. We don't know where, because this could end up doing this kind of deal here, right? We don't know. We don't know what's happening. And this could end up forming a valley. If this does this, right, and goes down to here and then continues up, we move our level. We're going to end up moving our chotch here. Now we still have to break these levels, of course, but we're going to be looking at that we're going to be looking at a new chotch. This hasn't convinced me yet that this is a turn back. I still like, because of these candles wicking up here, I still like this general move. But depending on what happens the next couple of days, it may look more like this, in which case our new level to beat could be here, right? Could be here. We don't know. We don't know until it develops. And then once that level breaks, then we're looking to enter into the daily thing there. Okay, so how do we get even more confluence in this trade? Well, believe it or not, something I don't talk about a lot because I don't prescribe well to support resistance. Support and resistance zones are another strong key factor for confluence. We don't have a very good one here. If we're looking at like support and resistance, there really isn't a whole lot of good levels to go off of an example here. I'll take a look later on a different time frame to see if I can see a better one. But I don't really like, this is so choppy. I don't really like any of this. But let's say there were support and resistance levels here. Let's say this wasn't so darn choppy here. And we ended up with a flip, right? Gosh, I don't even see a flip. Here's one. Here's a flip. So here's a flip zone, right? This was resistance. And there's a little bit of confluence over here for this as resistance. And then it flipped here, right? This happened within the FEG of this. We want to see for a bullish OB, we want to see the zone underneath the flip, because we want this to flip again. It also happens to be the level I wanted to chotch, which makes it look even better. But this is where resistance flipped to support, and that is our fourth. Give me this. That is our fourth support resistance flip, or vice versa. RS flip. Now the caveat here is we want the flip above a bullish OB or a demand zone. Whoops. Or vice versa, we want the flip below a supply zone. So that is our fourth level of confluence. we have that here. I don't like how far it is, but that probably has a lot to do with this low volume node here. These are some pretty big moves, and it's all the way back to here too. So because it moved so fast, it moved the flip quite a lot. But it technically falls under what we're looking for, which is the demand zone underneath a support resistance flip. So again, we were going to want to see this even better. We would love to see that, right? And then once we enter this zone, you pretty much long it right from here. But what's our goal, right? What are we trying to hit with this? Right here, right on the line. If you want to be a little less risky, you could do this. You could also watch it on the 1 minute and kind of gauge where it goes in here. Me personally, this much confluence, I like this trade quite a lot. I would be looking to take it right at the line. Because I think with all of these huge candles that have been happening here, very likely we're just going to wick this and go on. I highly doubt that we're going to spend a whole lot of time here. It could, you never know, but I highly doubt we're going to spend a lot of time here. I think we're going to wick this and run. What's our target, right? Our target is going to be that original break structure. See this line right here? This is now our target. Now, it very well could continue the trend. The idea for an OB is for the trend to continue. It should continue. However, when you get greedy is when you lose, and we don't want to lose. This is nearly a 4R, 4 risk reward trade, which is very good. If you can get 3 to 4 consistently, you're going to be making a ton of money. Actually, it's probably more because I actually want it right here. Yeah, so this is almost 5, 4.5. Risk reward. That's very good. Now a lot of people will like to push this up here and try to continue the trend. We don't really know where that is gonna end. If we're gonna guess based on FEGs, I would say probably right here would be a good level for it to end. If you want to push it, targeting the minimum of a fair value gap always works. I personally am targeting that initial break of structure that set up the order block to begin with. That's my goal for that. And just like that, I gave you guys a long signal on Bitcoin. This could take a little while to fill. However, if this plays out, I will be taking this trade. Now, something to keep in mind. It doesn't matter how much confluence you have. It doesn't matter how smart you think you are. It doesn't matter how insanely SMC the concepts are, which is smart money concept. Doesn't guarantee you're gonna win, right? There's no guarantees in this. We're just looking for confluence. Now, if for some reason we come all the way up here and we don't hit this, we come all the way up here, right? And then we start to do this all the way back down, I probably am not going to be keeping this trade active. I'm not going to be doing that. Instead, I'm going to be looking for a supply zone to short from instead. Otherwise, once this trend shifts to bearish overall, we have just lost our number 3 confluence. Right now, this is still bullish. This is a bullish trend. And even if we go down to here, it remains a bullish trend. It will chotch on the 4 hour to get down here. I believe, hold on, let me double check that. Yeah. So our 4 hour strong low happens to be this level right here. So we will have a chotch on the 4 hour before it comes down here. But that's okay. That's quite all right. We're still in a good zone here. However, if we're going to continue up, especially if we clear this fair value gap on the daily, there we go. Especially if we clear this fair value gap on the daily, in order for us to come back down all the way down here, it's going to be a bearish structure. And at that point, I no longer have the number 3 confluence here. That goes away. Even though there's still a fair value, we might get a reaction here. There could very well be orders left behind. More than likely by then those orders are cleared, but they could still be there. You never really know. You don't know where the orders are. There's just no way. No way to know. But once you get that bearish confirmation that continues, I don't like this trade anymore. But we're not there. We're not there right now. Right now, this looks very solid to me. I do have this order placed with a significant amount, and I'm hoping it works out. And that, my friends, hopefully helps you understand. I will likely do more videos on this subject because it's very complicated, and there are more levels of confluence that you can use. But they are also with some concepts that I haven't really done before. And I don't want to explain concepts that I haven't done before in a video until I do them. And that, my friends, is going to do it. Thank you so very much for watching. Remember to check out the Discord server below. Hit me up in the comment section or in Discord if you have any questions. I want to hear them. Take it easy.